Welcome to TradeTheMBA.com. This is John's reports for the 28th of June. Well, excitement tomorrow here in Italy, well, in particularly in Florence, we have the Tour de France coming through. So speeding through in kind of an epic situation where you've got a Tour de France here in Italy. The market. Wow, this, lived through some incredible times. Dot-com bust, crashes, flash crashes, both the late 80s all the way through till to now. But this is an extraordinary time. I mean, even with the Fed overtaking the markets and owning them, we're in a situation where there are just things that don't make sense, and that's fantastic because the opportunities that creates. It reminds me before in 2006 and 7 when you could see the prices for real estate and stuff getting out of control in California, where I was, and just recognizing that the tax payments were more than what typical mortgage payment was just a few years ago, and now we have even more similar developments because some things just don't add up. What we see in the bond market versus what we see here happening in the regular market, uh, one of the two of them is wrong in like an epic way, and that is fantastic that you can see short interest, nil. They're not even going at it anymore. Um, Continue the rise, moving back towards that 100% line, coming off of the ABM yellow. So we have a gold rising on the shakeout. These are all continuation patterns. We have the full reset still from the steel and not dipping below the negative 13, which would be like negative from it coming above. So it's all congruent from a market standpoint. They love the debate situation. I don't know that it made any difference either way. Some people are calling it a spectacular victory for Trump or whatever. I don't know what the hell that even means, but okay. At the end of the day, you've got very, very muddled economic conditions mixed in with a massively still increasing potential inflation situation. And treasuries are at a yield that suggests that the Fed is going back to zero. Yeah, you can't have both. Well, you can have it for a short period because we're experiencing it, which makes it such a unique situation. From an NQ standpoint, you can look at that still super positive from all those readings. Uh, Nothing to really comment. The key here is wherever we see the first dip in our shakeout, if it's below the congruency of higher highs with out a higher shakeout, then we know that there's going to be some kind of fade back. But for now, the market seems pretty content with everything they're seeing. And then we go to treasuries here, and it's just extremely out of line with what we're seeing because oil continues to rise, and as long as we've been around, as oil rises, so does your inflation rate. It's just no other way around it. We're already been at elevated rates. There's been no easing. We had a short period here where there was the soft decline, but that's been completely reversed. So, what do you do with that? And what reasonable CFO or person is buying these treasuries at those values? Who? It makes no sense. I can't even identify it unless it's the government itself buying it because all the other foreign interest has dried up for the most part. As far as treasuries go, they've been moving into other things as part of the whole BRICS configuration and the bifurcation of the Russia China confusions. So yeah, this is going to be an epic one when it all comes to a head because there's no evening out, and of course the euro declining from that oil rise, so that's at least congruent. So you get the euro situation. Of course, there's automatic debasement of the dollar, but it's all relative because all the other currencies are getting the same debasement, except for those that obviously hold the commodities because they're obviously worth a lot more. So that is interesting because those are the groups that basically have broken away and are no longer supporting the U.S. in the uh, continued debt cycle. Don't even get started on that one because, as we were talking about before, it's not sustainable. And now you're reaching this hyper point where it starts to exponentiate. So, what does the Fed do? Go to zero rates? The market, we could see, if they do that kind of move to the S&P of what 8,000 9,000 if that's the case, because I mean all you're doing is promoting more and more hyper speculation, and you're going to get a further and further devaluation of everything, and the market never accepts that. Gold will have to skyrocket with this configuration as it is. The fact that it's been held where it is, despite the fact that we already know that central banks have been buying up gold throughout the world, they've been able to even keep it at this level. Pretty amazing. The beauty of paper markets allows you to contain things, something we've talked about when it comes to crypto. That was the whole point of setting up these future contracts and that, to help moderate what would normally be exponential growth, because you have a fixed limited number of your bitcoins, whatever. Despite what anyone can say about crypto and it not being real, yada yada, it's still a store of value when there's only a certain number of them. And the only question has always been with Bitcoin acceptability and its universal application, and that's always been a hindrance to its ultimate move. The same thing with ETH and the others. And governments know that your power derives from the ability to control your currency, and he who prints the money controls it. Particularly where I'm from, you just go back to Renaissance, pre-Renaissance. Florence, Italy, and the Medici, they controlled their own florin, and that gave them unlimited power. So having an alternative currency goes against the ethos of any government, because it means you can store value, and they can't hide from you the fact that they're debasing the value of what you have. And it still begs the question. I don't understand why, if they can spend that much, why do they even collect taxes? It doesn't, because it's just, that's a whole different story. So many confusing things going on in there. However, within that, our ratings are pretty clean. It makes it very simple to follow exactly what the real money is doing in that, and they're always going to be on the victorious side of it, because that's what they get paid to do. But when you look at that bond market, it's just a nightmare configuration. I would move myself more onto the equity side of it, because I think it's just foolhardy when you're trading against the reality of where things are. Even if you think in the near term, 6-8 months, that's going to change, does that really look like that? That's an expectation that things are just going to fall off a cliff. Well, maybe they did with the debate, I don't know. But as we can see, pushing out towards new highs is all congruent within those readings. Nothing special. We supported right off the 50%, as would be expected, given what we saw from MBI White here declining into that negative 10 zone. Actually, just regular 10, but below the 10, it's always been bullish when we see intraday. Still excellent from a volatility. So again, this is handles the option situation. I don't think that's going to abate at all. But certainly, right here in post-market, we're getting a much more positive push as we're up in the new elevated highs. We're in a little soft point at this particular stage, but still putting us well into the green side of things. And it's going to be an exciting election year. The market is definitely going to make some serious moves as we continue to see softening of durable goods and some of these other key components that indicate the health of the economy, as well as just a major drop off from service sector areas. We see increasing bankruptcies from fast food companies, and that obviously the minimum wage increase in California was a complete disaster. That's already starting to show itself dramatically. In fact, we saw California's numbers are wretched as far as employment now, because that was just never a sustainable thing. You can't just arbitrarily do these kinds of things. But when people who don't understand economics do things thinking that they're satisfying social justices or whatever, it just is a disaster. It always has been, and will continue to be, because they fundamentally just don't get market forces. So there you have it, the long and the short of it. And I think it's just getting more exciting. We feel like we're in this pressure cooker here, and it's starting to get some serious pressure building, and something's going to have to blow. So we'll just keep following the readings. As always, anything relevant, I'll let you know. Have a good one. Trade well.